Why GameStop? Is it generational? Like, why did they choose GameStop?
This is opinion, but empirically speaking, GameStop along with about 10 other stocks has an enormous float of shorts. And that terminology, float of shorts, is, let's say there are 1 million shares outstanding of a stock. There are 1.5 million shares that are short. So people are borrowing more shares than exist and shorting the stock. Mm.
Speculation in the stock market is soaring, with retail investors piling into equities at a rapid rate this new year. We've seen GameStop soaring 685%. What is happening? Here to help us decipher everything today is Vince-Lanci, founder of EXPR Partners. He's also considered an industry insider and a frequent contributor to zerohedge.com. Vince, welcome back to the show.
Thanks for having me.
Well, I had to bring you on today because, as we're speaking today, Wednesday, shares of AMC Entertainment jumped more than 300% at the opening bell. We have GameStop going parabolic. We have Apple shares being tossed around like a rag doll.
Right.
Before I ask you to just explain the narrative here a second, have you ever seen anything like this in your entire trading career that really began when you were 3 years old?
Only in isolated commodities, never across broader markets. So maybe natural gas in the wintertime or a hurricane, maybe silver when Warren Buffett bought it, but nothing like this, not even the flash crash or the collapse of 2008. This is big, I think.
Okay, so what I want to accomplish today for our viewers, and for myself really, because it will be an educational piece for me as well, Vince, is who's behind it, who wins, who loses, and is this a short-term trend or a real paradigm shift? So let's start with how this snowballed. Now we know it happened on Reddit, but who's really behind it? We hear the theories that it's a bunch of kids who are bored, there's no sports betting happening, and they took to this. But how do you see it?
You can start with Bitcoin. One of the reasons that people care so much about Bitcoin, or one of the reasons that it's so in the forefront, is because it's about decentralized finance. I'm not saying Bitcoin itself is DeFi, but DeFi is about removing intermediaries, removing brokers and bankers, and about things in the middle. So you're removing these centralized powers that control the flow. And that's one of the attractive things in Bitcoin. And generationally, younger kids are, by younger, I mean, anywhere between 15 and 45, they're looking at the world in general as, in my opinion, unfair. And call it activist investing. So the Bitcoin kids are doing the same thing, and they're right. The reason this segues into GameStop and the other stocks that are doing that is the markets have changed in 3 important ways. And whenever there's like a live event going on, I look at it through 3 lenses: economic, regulatory, and technologically. Economically, who is making money, who is losing money? So the Reddit kids, let's put it this way, retail is making money. Hedge funds that are shorting stocks and getting complacent about their risk are losing money. Market making firms that are dealers in options that are implicitly backed by the Fed are probably losing money. Retail investors are making money. And so that's the economic win and lose. We can go through the names of the hedge funds, but there's more that are going to come out. Technologically, the reason this is able to happen, the reason you can have things like the technology of things like blockchain and DeFi and retail brokers, it decentralizes the control that Wall Street has had. It puts the power, it's almost a populist thing, putting the power back. It enables a kid to trade. Now, I'm not saying he should. The third thing is regulatory. How will the regulatory agencies handle this? And we are looking at, I think, to answer your question about a sea change or a paradigm shift, we're looking at the logical long-term consequences of centralized planning by central banks combined with stimulus, which is needed now, combined with a destroyed middle class by what's happened in the pandemic.
This has rattled Wall Street, right? There are theories that there are professional players also involved in this, that it's not just, a bunch of kids that are bored. How do you see that? Or what are you?
I would not be surprised.
Right.
There are, I mean, throughout history, whenever you have a populist or activist movement, there are always status quo or upstarts that have the impression of being for the people, but they're really just tagging on to surf and make money on their own. So there really is a groundswell. There is a problem, and it's this is kind of like Occupy Wall Street, except the kids doing it are capitalists. They're not socialists. So they're proving it with their money. They're taking risk.
Isn't this a form of market manipulation?
I think the people that are the incumbents that have the most to lose will say yes. I think it's actually much less manipulative than what we've been led to believe is a real market. And by that, I mean, when you've got 1 million people in chat rooms saying, I'm going to do this, I want to do this, and then doing it with their money, $500, $1,000, that's infinitely more transparent than 3 hedge fund managers having a conversation in a room with a former Fed chairman saying, well, you take over this position and we'll do it really quietly so there's not a lot of volatility. It's actually less manipulative, in my opinion. Doesn't mean manipulators are not jumping on this bandwagon. Don't get me wrong.
It fascinates me how this snowballed. I mean, I would love to know how many people were involved in the original chat and how many there are today. Don't you find that interesting, Vince, how big this has become?
I don't, in my Twitter account, I follow the Reddit Wall Street Bets guys, and there have been a bunch for a long time. And it's kind of like the 90s chat rooms, only it's real time and they're doing work. And to answer your question, I don't know how big it was, but I think they've added a couple million users in the last 2 weeks.
Absolutely, absolutely crazy. So I guess, how do you see this playing out? How does it stop? Do the regulators, I mean, we're seeing it, they're halting trading, but what happens next?
Well, I mean, I know how this ends, and I know where it is. The path from where we are to how it ends, I don't know how we get there. And by that, I mean, this is where we are. We all can kind of figure out where we are just from what we're seeing. It ends with one of 2 ways. He's giving you a digital example. One is the government, the regulators, the people with the most to lose will, under the pretense, not necessarily false pretense, under the guise of protecting the public, protecting 401ks, will, protecting investors, will intercede and throttle the access of speculative money. And then you'll have a return to order. I don't think that's going to happen, although they'll try and do that. The flip side is you have a reset. And I don't necessarily mean end of the world reset. I mean, it's a meet the new boss, same as the old boss type of situation where the kid on Reddit becomes a hedge fund manager earning 2 and 20, co-opted. So I'm a little bit all over the place on this because it's still developing.
Yeah.
But I think it ends with a clampdown.
Yeah.
Regulatory, technologically, as you said, okay, and economically, they'll raise margin requirements. They'll prohibit options from being traded unless they're closing. They did this in silver in like 1987. I heard. I'm not that old. How we get there, I don't know though.
Every time we speak, a clampdown happens immediately after, Vince.
Right.
Just saying. I'm just putting it out there. Okay, wait. I had one more question because I'm learning a lot from you here today. Why GameStop? Is it generational? Like, why did they choose GameStop?
This is opinion, but empirically speaking, GameStop along with about 10 other stocks has an enormous float of shorts. And that terminology, float of shorts, is, let's say there are 1 million shares outstanding of a stock. There are 1.5 million shares that are short. So people are borrowing more shares than exist and shorting the stock. So you have a large float or a large open interest of inventory of hedge funds that are short the stock for a long time. They're making money, they're complacent, they haven't gotten out. And so now what you have is you have these shorts get spurred to close because people start buying the stock, but people are buying options. And if you're buying options, you're actually controlling more stock than is actually out there.
Right.
Answer your question. GameStop had a start when this started. GameStop had a float of about 150% of their stock in short. Bed Bath and Beyond. You talked to. We were off the air. It doesn't seem like something that millennials or Generation Z or Zoomers, whatever you're calling them now, would be into. But I think there are some people that know what they're doing this. Why GameStop? I guess my soundbite would have to be, these are video game kids that grew up playing video games. Why not start with GameStop?
I guess it's a wrap. There's a lot of Wall Street big names saying, look, don't entertain this. There are easier ways to make money. Don't step foot into the lion's den.
Right.
I mean, this is very appealing. It's attractive. In your comparison to Bitcoin, it's kind of creating this FOMO. Like, I don't want to miss out on this GameStop, AMC, Bed Bath action.
Yeah. Two answers. One, without saying names, the people that are saying that have too much to lose to say anything else. Their jobs, their careers, their biases are showing now. It's a lot of the people on TV. And to say that it's easier to make money a certain way, how is it easier? It's not easier to make money. It's easy to make money gambling. It's also easy to lose money. So if you're talking about what's going on right now, how hard is it if everyone's being given $1,500, $600 to just all buy stock at the same time? How hard is that?